Attention family offices and wealth management firms. Do you manage the assets of high net worth individuals and wealthy families seeking more aggressive returns? Would your firm be interested in consistent deal flow, providing access to 2 to 5 year private investment opportunities offering 5.75% annual returns, paid through monthly installments, resulting in 11.5% to 28.75% total base returns over the full terms? Would your firm also appreciate that these same opportunities include fixed, one-time profit participation remittances at maturity ranging from 9.75% to 14.75% for combined return potentials of approximately 21.25% to 43.5%? Would you like to provide your clients with access to real estate secured investment opportunities from local home builders and developers that can consistently deliver such returns? Have you noticed the surge in land development and the construction of new single-family homes, townhomes, and condominiums across markets nationwide? It's amazing. Residential development is thriving across multiple verticals, even as banks and traditional lenders have become more conservative, creating a growing opportunity for private investors to help provide the capital needed to bring new housing inventory to market. Family offices and wealth management firms like yours can capitalize on this growth, but how? By collaborating with Builders Commercial Capital Group, BCCG, firms can access a pipeline of upcoming short-term investment opportunities designed to finance projects led by experienced home builders and real estate developers. BCCG is a commercial mortgage banking firm that specializes in originating, underwriting, and privately placing construction loans for short-term built-for-sale residential projects, including land development and single-family subdivisions, as well as luxury custom homes, townhomes, condominiums, and larger residential communities. BCCG works exclusively with licensed, bonded, and insured construction companies, home builders, and real estate developers with documented and verifiable track records of successfully completed and sold projects, which may be made available for investor review. For the second quarter of 2026, BCCG is cultivating a consistent, coast-to-coast pipeline of short-term, high-yield, residential development and construction investment opportunities sourced from experienced builders across a diverse range of projects. This broad mix of land development and single-family residential projects unlocks compelling opportunities for private investors across a wide range of sizes, scopes, scales, and housing markets. The capital requirements of these projects vary widely, ranging from $5 million to $150 million. To efficiently fund these opportunities, BCCG simplifies the capital raising process through loan syndication by dividing each loan into smaller, mortgage shares to accommodate multiple participating investment firms and family offices. Syndication enables firms to co-invest fractionally, acquiring mortgage shares to take measured, risk-adjusted positions aligned with their investment objectives. These mortgage shares are structured as loan participation notes, LPNs, typically offered at $500,000 per note. In this context, syndicated loan participation notes, LPNs, operate similarly to collateralized mortgage obligations, CMOs, in publicly traded CMBS structures, but are designed for private, non-securitized commercial mortgage loans. The number of LPNs issued per construction loan generally ranges from 10 to 300, depending on the capital requirements of the project. The sale of the land developers or builders' inventory of newly constructed assets, including finished lots, homes, townhomes, and condominium units, serves as the primary source of both loan repayment and investor returns. The syndicated construction loan notes are available exclusively to accredited investors, family offices, and wealth managers pursuant to securities registration exemption provisions under Regulation D, Rule 506 of the Securities Act of 1933. This structure provides qualified investors access to institutional-grade residential construction opportunities within a compliant investment framework. BCCG's investment premise is straightforward. investors capitalize on the margin generated from the sale of the land developers or builders' inventory of newly constructed assets, including finished lots, homes, townhomes, and condominium units. In practical terms, a 50-home single-family subdivision constructed at a total cost of $25 million equates to an average construction cost of approximately $500,000 per home. Assuming a 1.55 cost-to-build ratio, the projected total retail value of the completed subdivision would be approximately $38,750,000, or roughly $775,000 per home, reflecting the builder's anticipated margin. For example, a $25 million residential subdivision project structured under a 24-month loan term would generate 11.5% over 2 years, totaling $2,875,000, paid in 24 equal monthly installments of approximately $119,791.67. On a per-investor basis, each $500,000 loan participation note, LPN, would generate approximately $57,500 in interest income over the term, or about $2,395.83 per month. In addition, an 11.75% participation payment would equal $2,937,500, payable at maturity pursuant to the loan documents. On a $500,000 per LPN basis, this represents approximately $58,750 in additional profit participation, resulting in a total return of approximately $116,250 per LPN. Combined with interim interest payments, the total investor payout across the full project would be approximately $5,812,500 over the term. Each syndicated construction loan investment provides free remittance schedules. First, investors receive fixed monthly interest payments during the construction and marketing of the home. Second, investors receive repayment of principal upon sale of the property. Third, investors receive a profit participation payment ranging from 9.75% to 12.75% of the principal investment, payable upon sale as stipulated in the loan documents. Under the construction loan agreement, builders are obligated to make interest-only payments during the project, creating predictable interim cash flow. Upon sale, principal is repaid and the participation component is distributed. Based on the structure and negotiated participation terms, the combination of interim income and the due-on-sale component can produce total returns of approximately 21.25% to 41.5%. The interim rate is currently fixed at 5.75%, reflecting a spread above the 90-day SOFR benchmark. Family offices and wealth management firms will appreciate the control framework governing how capital is safeguarded throughout the life of the loan. They will also appreciate BCCG's fiduciary approach to managing loan participation funds. A licensed title and escrow company serves as the independent custodial agent, holding all investor capital in escrow in accordance with governing closing instructions. BCCG does not have access to nor control over these funds. A commercial real estate attorney oversees each loan closing and prepares all governing loan documentation. Construction loan proceeds are disbursed exclusively on a verified monthly progress payment basis. An independent construction loan administrator audits and monitors all disbursements. An independent third-party inspector conducts periodic site inspections to verify construction progress. A licensed loan servicing company administers borrower payments and remits principal and interest directly to investors. A common and reasonable question is, what happens if a property does not sell before maturity? A delayed sale introduces default risk. To mitigate this, BCCG implements commercially reasonable marketing, pricing, and sales strategies. Because repayment is driven by the sale of completed housing inventory, BCCG works collaboratively with developers to support successful project completion and sale. Experienced local real estate sales and brokerage firms are retained under listing agreements to market properties during construction and upon completion. Where market conditions permit, BCCG retains experienced real estate brokerage firms to lead and execute pre-sale efforts. By securing buyer commitments prior to or during construction, developers can accelerate absorption and reduce market risk. This approach helps shorten marketing timelines and reduce exit uncertainty. Participation in these opportunities is not offered to the general public. Access is limited to family offices, wealth managers, and private investors who complete an opt-in registration process. To opt in, firms complete a brief questionnaire. This allows BCCG to understand each firm's investment parameters and capacity. Registered firms receive documentation for independent review. Firms interested in participating in a given project's construction loan may submit a letter of intent, subject to each firm's independent due diligence review of the materials provided by BCCG. This overview illustrates how BCCG positions itself to collaborate with private investors and home builders. Nothing herein should be construed as an offer to buy or sell any security. Builders Commercial Capital Group is not a registered broker-dealer or investment advisor. BCCG operates solely as a commercial mortgage banker for syndicated, private, non-securitized commercial real estate loans. Firms seeking additional information are invited to access the links provided below. The first link offers a downloadable PDF information package, and the second directs you to the BCCG landing page to complete the opt-in process and obtain access to summaries of upcoming short-term investment opportunities. Time is of the essence. Opt in and register today to gain early access to upcoming projects, with loan closings scheduled for second quarter 2026. We look forward to working with you and becoming a valued contributor to your firm's continued investing success.